Okay, go ahead, Mr. Receiver.
Thank you, Mr. Kapoor, and good afternoon. My name is Michael Dowry. Today is Tuesday, August 22nd, 2023. We are joined here today for the Municipal Financial Recovery Advisory Committee meeting, MFRAC. On the call with us today, we have, on behalf of Governor Shapiro's office and the Department of Community and Economic Development, Mr. Andrew Sheaf. I'm sorry, looks like not on camera yet, but joining the call is Councilman Morgan on behalf of City of Chester. And as always, joined by Mr. Vijay Kapoor and Mr. Cody Dale on behalf of our receivership team. Good afternoon, gentlemen.
Good afternoon.
We did receive notification last week that Ms. Kelly Diaz, who represents Delaware County Council, will not be able to join us here today. And I'm not sure if Mayor Kirkland will be able to join us. We'll see. But let's begin. We have a pretty lengthy meeting here today, as we want to present an update on status of the recovery plan and just everything else that is going on. So our first order of business is public comment. Cody Dale, were there any public comments received since our last meeting?
So there were not any further public comments received. Would just like to continue to encourage the public again to reach out to us via email at info@chesterreceivership.com or through Facebook or our website. Any public comments that pertain to the work of this committee can be sent to all of those locations. Again, the email, which is usually the easiest to get, is info@chesterreceivership.com. Thank you.
Thank you for that. Thank you, sir. All right. Well, after public comment, we move into the status of the recovery plan and then a receiver update. Mr. Kapoor, would you like to provide an update on a recovery plan or defer everything to the presentation?
Mr. Receiver, I think it's just best if we take everything through the presentation.
Yeah, and I have a couple updates or general items, but I think the majority of it would be touched on in the presentation. And there's just a couple comments that I'll make in closing. So let's jump right in. Mr. Kapoor, if you're ready, we can begin with today's presentation.
Okay, thank you, Mr. Receiver. Let me go and get my screen shared, and if you could, someone give me a thumbs up here to make sure that it's up. Okay, fantastic. Good afternoon, everyone. My name is Vijay Kapoor, serving as the Chief of Staff to the Receiver. We have for you today is an update on not only the bankruptcy, but also a bit of a background and kind of a little insight into kind of what the thinking is on the receivers team and as it relates to the bankruptcy approach. We realize it's been quite a while, I think, since we've given an update like this. This is it almost feels like to us like almost a quarterly update at this point. And we've got a lot in here. And hopefully what this will do is help those of you who are interested in the process get a better idea in terms of what's going on, but also about how the receiver is approaching this, and both from a kind of a 30,000-foot level as to what we're thinking as we define what success would be, but also kind of on the nuts and bolts in terms of what we're doing day to day in order to advance things. So the purpose of the presentation today, first, we want to update you on the status of the bankruptcy process to the extent we can. The second part of the presentation is to provide a high-level understanding, again, of the receiver's approach to this process. And there's two key components to that we'll get into. One is how the receiver is defining success, if you will, through this process, and really throughout the receivership process as well. And the second part of that is the development of what we're referring to as the number. A lot of folks are asking, whether they be creditors or otherwise, how much do you need? What do you sort of what's the gap that you're trying to close? We're essentially defining that as the number, and we'll talk about that a little bit later because that is a key component, and we'll talk a little bit about our approach to what that is as well. So as we go through the presentation today, in terms of the bankruptcy process update, we're going to give a little bit of a background on the bankruptcy, very short, for those of you who may be sort of new to this. And then we want to talk a little about some of the litigation matters, and then also touch briefly on the status of the mediation. So starting with the bankruptcy process update, to take a, again, to kind of take a little bit of a step back, in terms of how Chapter 9 bankruptcies work, they effectively have what we'd refer to as three kind of main phases, if you will. The eligibility determination, the mediation, and a plan of adjustment. Effectively, the plan of adjustment is the overall plan. It is something that the bankruptcy court would approve, and that is really kind of the goal, if you will, of the bankruptcy process. At this point, we are in what I'd refer to as the mediation phase, although there is an appeal out there as to the eligibility determination. But I think for our purposes right now, and those of you who are following along, we're really kind of in what I'd refer to kind of the beginnings, if you will, of the mediation phase. Bankruptcy can take a long time. It can be a long process, or it can be a shorter process. Two entities that have gone through the bankruptcy process: San Bernardino, California, Puerto Rico. In San Bernardino, it took over 10 years. That is not something we want to have happen here. In Puerto Rico, it took 4 years and 9 months. We are currently 9 months into this bankruptcy, which was filed on November 10th of 2022. So still, I think by bankruptcy standards, or Chapter 9 bankruptcy standards, still kind of in the earlier phase. Although, as we'll talk about later, the receiver has every incentive to make sure this process moves along as quickly as we possibly can, because it's really the residents who are being hurt the most by remaining in the status quo. So a couple of key points on the bankruptcy. One is, again, just by way of some background here, is the receiver filed for bankruptcy on the city's behalf on November 10th of 2022, so a little over 9 months ago. At the time of the bankruptcy filing, the receiver asked for judicial mediation, which was granted and is ongoing. Under Chapter 9 bankruptcy, as the debtor and acting on behalf of the city in the bankruptcy, the receiver could take several actions, including, should he decide to, attempting to reject contracts, including collective bargaining agreements. I believe that was done in San Bernardino. That's not what the receiver did here. Despite having the ability to do so, he has not rejected most contracts, did so with the parking contract, but not with collective bargaining agreements, opting instead right now to go through the mediation process. And the other thing that's happened over here, I know there was a lot of concern when there was a filing by some vendors and employees. The city has continued to operate in the normal course of business. It is paying employees and it is paying in vendors as it had prior to the bankruptcy filing. In fact, we've had a couple of vendors tell us their payment has actually been improved since the bankruptcy filing. But the city has continued to operate in the normal course of business. So in terms of an update here on some of the litigation matters that are going on, that are stemming from the bankruptcy, that I think are important to highlight here. There's three main cases that are going on, and they involve, the first case involved determining the status of certain city debt, which we'll talk about in a moment. The second is the appeal by certain elected officials of the bankruptcy court's finding that the city of Chester was eligible for Chapter 9 bankruptcy protection. And then the third is an appeal by Aqua, Pennsylvania, of the bankruptcy court's decision that found that the bankruptcy stay, which is essentially a pause on litigation, applies to the Pennsylvania Public Utility Commission, PUC matter that's involving the potential sale of Delcora to Aqua. So we're just gonna talk a little bit briefly on kind of where those cases are, all of which have importance and relevance to the bankruptcy proceeding. So let's start with the first case. This is the case that has to do with determining the status of certain city debt. So in 2017, prior to receivership, Preston Hollow advisors loaned the city approximately $19.2 million that was to be used to refund debt and acquire a leased property. In this case, Preston Hollow argues that this debt is secured by revenues that the city receives from Harris Casino, as well as the Covanta incinerator. And effectively what that means in like sort of plain English is that they should get those revenues to pay off the debt before the city does. The receiver, on the other hand, believes that the debt is not secured, or the term is unsecured. So this is actually a key distinction. Whether something is secured or unsecured under bankruptcy law is very important because secured debt receives much more protection in bankruptcy. So if the debt is found to be secured and the city needs to pay it, obviously that means the city has to find additional revenues or cuts elsewhere to make those payments. That question, so whether the debt is secured or unsecured, is being litigated right now in the bankruptcy court. Part of the reason that the receiver is pushing to have this issue resolved is not only for the plan of adjustment, right? Not only to kind of figure out what are the revenues and expenses that we need to balance in the plan of adjustment, but also for the city's 2024 budget. Because remember, at the same time the bankruptcy process is going on, the city is also continuing to run operations. So from the receiver's perspective, there's really kind of two parallel things going on. You've got the bankruptcy process and also the continued provision of vital and necessary services for the city, for Chester residents. Where this stands right now is on Monday, August 14th, so last Monday, the parties filed what are called summary judgment briefs with the bankruptcy court. Summary judgment is kind of a fancy legal term, meaning that there is no significant dispute as to any material fact. So basically, if the matter is really just a legal question, if everybody kind of agrees as to what the facts are and what happened, and it's really just a question of law, that's when you file what's referred to as summary judgment briefs. So the expected next steps for this litigation are first, there's a pretrial conference that's set for September 18th, so next month, before the bankruptcy. And the parties have also agreed to ask the court for any trial to occur in the event that the court finds the need to resolve any factual disputes. So if the court finds that there is something that the court believes is a kind of a factual dispute, for that trial to occur by October 15th of 2023, we would ask the courts, the parties would ask the court to do that. All of that, again, is to try and resolve this issue prior to the 2024 budget that the city needs to have and needs to plan for next year. So if the folks are interested, the filings in this matter can be found at this website. So this is in the Preston Hollow litigation. That can be found at this website, donlanricano/client CCP adversary proceedings. The donlanricano.com website also has the filings for the Chester matter. If you can look up the Chester case, it's got all the filings and the docket in the bankruptcy. So that was the first litigation. Second litigation matter involves the eligibility appeal of certain elected officials. So as I noted earlier, one of the threshold decisions that a bankruptcy judge needs to find is whether a municipality who's filing for bankruptcy meets the eligibility requirements for a Chapter 9 bankruptcy. You don't get it as a matter of right. A municipality has to meet the eligibility requirements. And so only two entities challenged eligibility in bankruptcy court. Bondholders and certain elected officials. On March 14th, that was the initial challenge. On March 14th of 2023, the bankruptcy court found the city met the eligibility requirements. And then after that, only certain elected officials appealed the bankruptcy court's decision. So this appeal goes from the bankruptcy court to the federal court, the U.S. District Court in the Eastern District of Pennsylvania. That's where these appeals would go. And that case has been assigned to the Honorable Mia Roberts Perez, who is a U.S. District Court judge, who again has been assigned this appeal. So the timeline of this appeal is this. The notice of the appeal was filed on March 28th of this year. After seeking an extension, certain elected officials filed their brief on June 9th. The city receiver responded on July 10th. And then the certain elected officials filed their reply brief on July 24th. So at the moment, all of the briefs are into the U.S. District Court. They were filed on July 24th, and all the parties are waiting to hear from the court. It is up to the court to decide whether it wants to schedule oral argument on the matter, or it could proceed without oral argument. Again, that is with the U.S. District Court in the Eastern District of Pennsylvania. The third litigation matter that I wanted to cover was the Aqua appeal of the bankruptcy stay application to the PUC Delcora matter. So a lot of words in there, but at the core of what's going on here, on May 23rd of this year, the bankruptcy court found that the bankruptcy law litigation stay provision. So this is a provision that's in the bankruptcy law that essentially says litigation that could impact a debtor's rights or the estate under the law is stayed initially in order to allow the bankruptcy process to continue. So the bankruptcy court found that this provision applied to the matter before the Pennsylvania Public Utility Commission, the PUC, of Aqua Pennsylvania's attempt to acquire Delcora. Aqua Pennsylvania is looking to essentially buy Delcora, and that process was going through the Pennsylvania Public Utility Commission. Aqua Pennsylvania is a private water and wastewater company. For those of you who don't know, Delcora is the public regional wastewater treatment authority that serves much of Delaware County, and which has its primary treatment facility on the Chester waterfront next to the Covanta incinerator, again within Chester property. Excuse me, within the not Chester property, within the Chester boundaries. And the reason, kind of what's stemming from this, the interest that the city of Chester has in all this is that this matter involves assets that, per a 1973 agreement, when Delcora was being put together, revert back to the city in the event that Delcora ceases to operate the city. So what's happening over here is the receiver, is looking to ensure that the city's rights are protected in any sale of Delcora. So where that's going on is, again, the bankruptcy court found essentially in favor of the city and the receiver, saying the stay applied. Aqua has appealed that decision because it wants the PUC matter to move forward. So Aqua's appeal is also pending in the U.S. District Court for the Eastern District of Pennsylvania, again, before the same judge, before the Honorable Mia Roberts-Perez. Timeline of that case, that is, Aqua filed their notice of appeal on June 6th. They filed their brief on August 7th. There was a request for an extension. The court deemed the brief timely filed on August 17th. And then the city's response, so the city via the receiver's response, is due on September 6th of 2023. And then Aqua's reply brief will be due on September 20th of 2023. And then the final area that we wanted to discuss here, at least in terms of the bankruptcy update, is with respect to the mediation and kind of where that process is. And I know for many people who are following this, retirees, union members, families of employees, residents, many of you are trying to kind of figure out what's really going on here in the mediation process. And it's probably frustrating on your end, for us to kind of have these kind of high level updates that you may feel aren't enough information or more information isn't being shared. And I can understand that. And I certainly respect that. The issue with mediation when it comes to bankruptcy, and it comes to Chapter 9 bankruptcies, is there is a desire and there is an attempt, I think, by all parties to see if indeed we can come to a mediated settlement. That is always, if it can be done, and done well, and have a good plan of adjustment, is obviously where everybody would ideally like to go, as opposed to having to litigate or to be fighting over a plan of adjustment. And so the mediation process in bankruptcy is confidential. It is done to encourage parties to exchange information, have frank discussions with each other behind the scenes, to see in the event, to see if we can actually reach an agreement. And those are ongoing. That process is ongoing. As I mentioned earlier, when the receiver directed the bankruptcy filing, he asked for a judicial mediator to be appointed, and to lead those confidential mediations between the city and the creditors. Judge Chan, the bankruptcy judge to whom this case was assigned, appointed Judge Mary Walrath, a very well-respected Delaware bankruptcy judge, as the lead mediator. And she appointed also a very well-respected bankruptcy judge from Delaware, Judge Stephen Goldblatt, to mediate matters involving the bondholders. So those discussions are ongoing. We've had discussions, very recently in these mediations, and they are progressing. One of the things I think that has that needs to happen here, I think, to help the mediations, I think, move forward, and I think everybody would agree with this, including the receivers team, and we'll talk about what this is a little bit later. All parties are really waiting for one piece of critical information, which is what we're referring to as the number that we'll discuss later. Obviously, when you deal with mediations and you've got different parties in here that are sitting around the table, an obvious question that is asked of the debtor or asked of the city is, okay, how much do you need, right? What is the gap you're trying to fill? And at this point, we don't have an answer for that yet. We're going to talk about what we're doing in order to get to that. We're going to talk a little bit about the strategy, a little bit about the tactical things that are being done. But at this point, if someone were to ask us, and many people have asked us, okay, what's the number? What are you trying to close here? We don't have that answer. Again, it's not because we're trying to hide it. It's not because we have it over here and we're trying to spring it on people. It's the fact, as we'll discuss later, we've not been able to develop it yet, but we're in the process of doing so. And we're going to talk a little next about, where we're going, and what the approach is. So I want to move next into the second section of this presentation, which I think is very significant. And we are sharing here with the public, and I think with creditors who are watching this, really the receiver's thinking and approach to this bankruptcy, what he is trying to achieve on behalf of the residents of Chester, where some of his thinking is, and hopefully that will help provide some information and some insight as to some of the steps that the receiver is taking, and also kind of his thoughts as we get further on into the mediation process. And we think it's important to share with the public, again, so you understand, and particularly the residents understand, what the receiver's thoughts are, and again, we encourage feedback. As Mr. Deal said, info@chesterreceivership.com. That is a way to get in touch with us. We encourage your responses to what you'll see here today. So let's start with a key issue, and really kind of a 30,000 foot, but very important, strategy question here is what is the receiver looking at, and how is the receiver defining what success is? Under Act 47, the law that the receiver was appointed under, the receiver is tasked with ensuring that residents receive vital and necessary services. It is very important. That is obviously a key requirement. And the residents of Chester, and I think some of the employees as well, can testify that inefficient operations have resulted in Chester residents not receiving adequate service levels. And what that means is, to that end, it is not just enough through this process or through receivership to just balance the budget. It's not just a mathematical equation. Chester needs to invest in its workforce and its infrastructure in order to provide adequate services. So the next bullet point, I think, is extremely key here in understanding kind of what our litmus test is, what our test is when we're trying to figure out, what the approach is, whether to do something, is defining success as ensuring that Chester can financially and operationally provide an adequate level of vital and necessary services on an ongoing basis in a manner that is in the best interests of its residents. So we're going to go through in the next couple of slides, because this is such, I think, an important statement here, to kind of go through and drill down a little bit in each one of these bolded components, so that people understand, again, where the thought process is of the receiver. So again, to kind of break some of this down, the key components of the receiver's view of success are financial and operational, adequate level of vital and necessary services, ongoing basis, and manner that is in the best interest of residents. So let's go through each one of these and talk about it. So let's start with the first component, financial and operational. So our view, and I think Chapter 9, given its unique type of bankruptcy, is not just about balancing budgets. It is about ensuring service provision to residents. I mean, that's the purpose, after all, of a city, is to provide services to residents. And if all we do here is try to balance the city's budget without taking into account the quality of service delivery to residents, which we'll discuss next, it just makes little sense. We're going to go through a very difficult process, if we did it that way, to close the budget gap on paper, but the lives of residents, will not be improved at all. And that, to us, very much makes little sense. Why improving operations, again, from the receiver's end, is something that's been a key value of his. And that's also why the receiver filed the plan modification that many of you may remember way back on November 8th of 2022. So over 9 months ago. We continue to await the Pennsylvania Supreme Court decision on some of those plan modifications that were appealed by certain elected officials. The oral argument on that matter was heard by the Pennsylvania Supreme Court on May 24th. As of noon today, haven't received a decision yet from the Pennsylvania Supreme Court. And again, we don't have any sense of when one might come. So let's move to the second component, right? We first talked about financial and operational. This is kind of related, but it's also key. And this is the section of the statement that talks about an adequate level of vital and necessary services. So, it's not enough from the receiver's view simply to say the city is providing vital and necessary services. I mean, of course, the city is providing fire services. Of course, the city is providing police services, right? But the issue is, from the receiver's end, these services must be provided at an adequate level. We don't have enough police officers on patrol, then we may be providing vital and necessary services, but they're not being done at an adequate level. And ensuring an adequate level of vital and necessary services is going to require investment. It's going to require additional personnel, increased compensation to recruit and retain certain employees, and investment in city infrastructure, all of which has been really hurt over the last 25 years. Also, it will require improved efficiency in service delivery and also management. So the concept of ensuring that a city can provide an adequate level of service, this is recognized in Chapter 9 bankruptcy. And the inability to provide an adequate level of service is actually has a term in Chapter 9 bankruptcy, and it's referred to as service delivery insolvency. and it was really, I think, probably most either fleshed out or attention was called to it in the city of Detroit's bankruptcy. Judge Stephen Rhodes, bankruptcy judge who presided over Detroit's bankruptcy, in his oral opinion approving the plan of adjustment, had a quote that is really well known in the Chapter 9 world. And what he said was, a large number of people in Detroit are suffering hardship because of what we have antiseptically called service delivery insolvency. Detroit's inability to provide adequate municipal services runs deep and has for years. It is inhumane and intolerable and must be fixed. And I think the same thing can be said of Chester. And part of the process, I think, of looking at the adequate level of service is to make sure that that is part and parcel of any plan of adjustment. Now, as part of that, you heard me talk about the need to invest in additional personnel, invest in additional compensation. The question has been asked, where we are right now, as to why the receiver is adding positions that have been requested by the city's chief of staff, when the receiver warned about the possibility of disincorporation. So let's address that question head on. So the first point I want to make here is that during those discussions about disincorporation, the receiver and I was clear that the city's fiscal cliff is going to occur in 2025 when American Rescue Plan Act, ARPA money, which is being used to maintain operations, will expire. That has not changed. 2025 remains the fiscal cliff. And we are actively working to avoid disincorporation. And we have to proceed as if we will be able to reach a resolution that avoids it. That is how we are proceeding right now. We are not unaware of the fiscal cliff. You'll hear me talk about it a little bit later, and the need to move expeditiously through this process, and why we are trying to move as fast as we can to move through the bankruptcy process. But the key point here is that city residents need improved vital and necessary services right now. Many of the new positions that have been requested are in the codes department, and that has a clear connection to public health and safety. And many of those positions, those services, will be at least in part funded by new fees. Some of that will have to be picked up by the general fund. That is true. But if you drive around Chester, if you're a Chester resident, you know that we need significant improvement in the area of code enforcement, in the area of ensuring that rental properties are inspected on an annual basis, that they are being kept up to code. That requires investment. And frankly, that has not been invested in over the years. And so we are starting from a position many times where we have got to build from the ground up. And that requires additional resources. And we realize that the more resources we put in, the more we ask to be included in expenditures, the harder the job is for us. The harder the job is for us to close the financial gap. We recognize that. But again, that has to be balanced against the need to provide an adequate level of vital and necessary services. So now let's move on to the next section, the ongoing basis, right? That's the next component. And this seems, I know, kind of seems to be a little bit self-evident. Ongoing clearly means sustainable over future years. It's not just one time. What that means, again, from a financial end, is that recurring revenues, so revenues that come in each year, have got to be greater than or equal to recurring costs. You've heard me say that many times, and we continue to believe that. We can't do the smoke and mirrors type of financial trickery that makes things look better than they are. That doesn't do anyone any good here. All that will do is put the city back in the same position after a couple of years. And that leads me to my second point here on the ongoing basis. That also means that the assumptions we use in the financial modeling, in the actuarial model, so that's for the pensions and retiree healthcare, must reflect our best good faith estimates for what will occur in the future. Sometimes there is a kind of an incentive, maybe not an incentive, but a perhaps a desire to maybe change an assumption here and there in the actuarial components that will actually have a pretty significant material impact on how a pension fund looks. One of the things that many of you may recall who were in the police pension fund may remember is the city was carrying over $30 million in what were referred to as receivables on its books. Again, there was nothing improper about that from an actuarial perspective or an auditing perspective. But what happened was, effectively, when you looked at the fund's assets, there was $30 million in those assets that really wasn't there and never was going to be there. And what that did was it made the fund look a lot better funded than it really was. And we have got to use assumptions, again, both in the actuarial modeling as well as the financial modeling that reflect our best good faith estimates going forward. The people we will let down if we don't do that are the residents and the employees and retirees. And finally, on the ongoing basis, this is also a key component and something that obviously will be part of a plan of adjustment and it'll be further along down the line, is making sure that controls and oversight also need to be implemented so that any plan of adjustment is followed. Because, full recovery for the city is likely going to take years. To implement any plan of adjustment, we are looking at a multi-year improvement. Now, that doesn't mean the receiver is going to be here. Don't get me wrong there. But in terms of the actual time it's going to take for the city to recover, this is measured in years, not in months. And there is a tendency, I've seen it in our work in other Act 47 communities, to fall back into bad habits. Once the immediacy of the crisis fades and people stop paying attention, there's a human tendency to say, hey, can we change some of these things? And in order for a plan of adjustment to work, it has taken years to get to the spot where we are now. It's going to take years to get out. And what's important is that you stick to whatever plan of adjustment is there. And that requires vigilant oversight. And that also requires strong controls and oversights. The final section I want to talk about here, I think is probably one of the most important parts, if not the most important part of the statement that I made earlier as to how the receiver is defining success. And that is making sure that all this is done in a manner that is in the best interest of residents. What often happens in financially struggling communities is that they will accept any new revenue sources they can get, really regardless of community impact, because their tax bases alone often cannot support basic operations. These projects, they're usually kind of come in the form of economic development projects. They'll come with the promises of jobs for residents. And they usually have some support within the communities from some community members. But it's only later after the project is built that the community feels and realizes the full impact of that decision. So from the receiver's perspective, the receiver does not think that dependence on revenues from industries with negative impacts on resident health is in the best interest of city residents, and seeks to make a good faith effort to develop a plan of adjustment that does not require financial dependence on those revenues. Now, we also understand, and the receiver also understands, the reality, and we'll talk about this in a moment, that eliminating dependence on these revenues cannot be done immediately. Obviously, what's probably coming to mind to a lot of people right now is the incinerator. The city receives approximately $5 million a year from tipping fees from the Covanta incinerator. If we were to eliminate that immediately, without some type of cost reduction or revenue replacement, we couldn't do it. We would not be able to do it. The city would not be able to do it. It is that financially dependent on those revenues. And that leads to a question that some folks may have, which is, isn't trying to reduce or eliminate the dependence on these revenues going to make it more difficult to fund city operations? It's a legitimate question, and in the short term, the answer is yes. But the receiver's view is, if a plan of adjustment is developed that relies on these revenues, that's dependent on these revenues, effectively, the city is going to be financially dependent on these industries continuing to operate in Chester for decades to come. And the city's waterfront, which is often touted as an economic development opportunity for the city. You can see what Philadelphia Union is looking to do there. If a plan of adjustment relies on those revenues going forward, the use on the waterfront is going to likely continue in its current manner. And so if there is a serious desire to change the uses of Chester's waterfront, you can see it in the Chester Waterfront Committee and some of the renderings and some of the desires of what folks may want to do on the waterfront. If there is serious desire to see changes to the waterfront so that different economic development uses can occur, not just at the waterfront, but also throughout the city, then the first step is to try to eliminate or to reduce financial dependence on revenues from industries that negatively impact the public's health. For those of you who aren't familiar with Chester and with Chester's waterfront, it's approximately 3.5 miles long, runs along the Delaware River, and has these entities on. And again, I'm not suggesting every one of these entities would fit the description of having a negative impact on public health. I want to be very clear about that. But if you look at these at what's along the waterfront, you've got a casino, then you've got a jail, State Correctional Institute, SCI Chester. You've got the Kimberly-Clark manufacturing plant. A little further down, you've got Subaru Park. Then you've got the Covanta incinerator, and then you've got the Delcora Maine wastewater treatment facility. And again, I want to make the point over here that several of these facilities provide significant benefits. They provide benefits to Chester residents, but they also provide benefits to people who don't live in Chester, the surrounding community, people in other residents of Delaware County. But although those individuals may get significant benefits that provide significant benefits to people outside of Chester, such as treating their sewage, having where their trash goes, Chester residents are the ones that face all of the negatives. So again, Chester residents, to be clear, also share some of the benefits of those entities. But it's Chester residents, particularly those who live along this area, who experience all of the negative consequences. And one thing that was really an eye opener for us, if we look at the actual data here and look at the poverty level along the waterfront, what I have on slide 27 here is data of family poverty rates. So within that same 3.5 mile Chester waterfront, the family poverty rate is 45.1%, which is significantly greater than other parts of Chester, as well as other communities who are also bordered by the Delaware River. So we, first off, thank you to Samantha Saunders of State Representative Carol Kazim's office. Representative Kazim, her district includes all of Chester as well as some in some of the surrounding communities. But they provided us with this slide that shows family poverty rates by census tract, as well as by the community. And what you'll see here, this is the Delaware River, this is the waterfront. The individuals around here, and again, you can barely see this is shaded, but it's darker. This is where you see the most significant poverty in Chester. When you get further out, kind of further away, you've got poverty rates of 33%, 25%, in some of the other parts of Chester, maybe 11%, 11.5%. Again, this is family poverty rates in 2021. But you'll notice here, and again, it's striking, just the significant poverty rate for the individuals who are living close to the waterfront, right? And you would think that would actually be reversed, right? If a waterfront is an amenity, as it is in other places, you would think that that would be the place where you would have the strongest economic growth, right? Like where property values come at a premium, where people would want to live. But that's not the case in Chester. And you'll also note here, kind of comparing it to the other jurisdictions who have, first off, who have industry, but also who are along the waterfront. Eddystone has got a family poverty rate around 24%, and kind of also closer to the, it's a little bit higher as you get closer to the waterfront. Marcus Hook around 9.7%. So again, it's something that was striking here to us as you look at as you look at the question as we go forward with a plan of adjustment and ask very seriously what do the residents of Chester want? What should this plan of adjustment look like? Because the decisions that will go into this plan of adjustment will define what Chester looks like for decades to come. And one of the ways that you can see that, right, is kind of the story of how the Covanta incinerator came to be built in Chester. We think it's important here to share that as well. Number one, because I think it helps us to think about those folks who are part of this process, but also the residents to understand economic development and understand the questions of what are the possible solutions we have here in Chester, and what again is in the best interest of residents. The story of how the Covanta incinerator came to be built is told in pretty good detail in chapter 5 of the book Race and the Politics of Deception by a University of Buffalo professor named Christopher Melee. I would strongly suggest those folks who are interested in Chester's history and in regardless of whether or not you agree with the author's thesis or take on Chester's history, some of the information that's provided and the sites to it are help, I think, to put Chester's history and Chester's situation in context. So very strongly, recommend folks read this book. But if you look at that book and you look at again, how some of this development, particularly the incinerator, came about, was interestingly, and this is something I frankly didn't know coming in here, the desire to build an incinerator actually initially came from Chester City elected officials in the 80s, who saw it as, quote, the cornerstone of the city's plan for economic revitalization. It was actually city individuals who wanted to build this in the 80s. And the mayor at the time actually envisioned Chester as the book uses the term waste magnet, profiting from packed landfills and looming trash crises in larger nearby cities, such as Philadelphia and New York. So it was actually a conscious decision to essentially make a industry in Chester be trash. And to build her case for the residents' consent, the mayor reminded the audience, this was at one of the public meetings, of the importance of the incinerator as the best and last chance to address the city's poverty, high crime rate, and declining tax base. Again, this was happening in the late 80s. That the mayor and other Chester officials launched an aggressive public relations campaign to build the incinerator. The mayor promoted the incinerator as the best opportunity for the city to secure its own economic development. The incinerator would generate between $5 million to $10 million a year from tipping fees. And the sale of the electricity generated 300 new jobs with a minimum of 25% of the workforce minority employees, and up to 1,000 additional new jobs in new firms locating in Chester to buy and sell recyclable materials. If you go to that section in the book, there's a site to 3 newspaper articles and other reports where it provides the site to this, which was used as a way of kind of pitching and arguing for the incinerator. What was fascinating about that situation was that the city was fighting to have the incinerator built, but actually so was Delaware County. Delaware County was looking to also have an incinerator built over there. And the fight was actually between the city of Chester and Delaware County over which entity would build the incinerator, with Delaware County eventually the one winning out. And the book goes into detail about kind of how that occurred. So the debate actually was not whether an incinerator would be built. That wasn't the debate in the 80s or the early 90s, but it was really about who would build it. And the point of that right now, as we again kind of talk about this, is that city residents are still living with the impact of those decisions made 37 years ago, including, number one, financial dependency on revenues from the incinerator. And again, I would note that right now the city receives about $5 million a year from the incinerator, and that actually was at the low end of what was being touted as potentially the city receiving way back when, right, in the late 80s, early 90s, right? You would think with inflation growing, right, that number would be much higher, right? But that is what was being touted back in the 80s and early 90s. Where we are right now is around $5 million. The other impact about that is we're seeing truck traffic to and from the incinerator. And the other thing that's happening here in Chester, I think that does have a direct impact, you can draw a direct line to the incinerator. And again, the desire to sort of make Chester, an industry in Chester, garbage, is that people are coming to Chester with garbage, contractors otherwise, and some folks illegally dump it here. Which is a huge problem for the city's public works department, as well as obviously being extremely disrespectful to Chester residents. So the point of kind of going back there and talking about kind of the incinerator's history and talking about this, at least from our end, is that, that was a conscious decision. And just as we're moving forward with trying to figure out the plan of adjustment, trying to figure out the revenues, trying to figure out what we do with this, right? Those are also conscious decisions. That I think we need to address. Again, at the same time, we want to again emphasize the point. The city is also right now financially dependent on this, and so that's a key tension point that the receiver's office faces. But again, the receiver wants to make a good faith effort to try and develop a plan of adjustment. That is not dependent on revenues from industries that negatively impact the health of Chester residents. It's going to make that job more difficult in the short term. But again, if in the long term, if we don't make a good faith effort here, we're effectively saying that Chester's waterfront is going to continue to look with some marginal changes pretty similar to the way it looks now. So that was kind of the high level, what I refer to as the high level, defining success. I want to talk now a little brass tacks about how are we developing the number? What's really going on over here behind the scenes? How are we trying to get to moving along the mediation process and the plan of adjustment process? So let me start with a term that you will be hearing more and more about, and that I think is gonna really, it's going to be something that we're going to be using shorthand, and I want to define it now. And that is the term, quote, the number. So let's start with what is the number. So we have been in the process to develop what we're calling the number, which we define as the baseline expenditure, so the baseline cost level that's necessary for Chester to provide an adequate level of vital and necessary services. Right? Providing an adequate level of vital and necessary services comes with a cost. We believe right now, Chester is not providing an adequate level of vital and necessary services. As I said earlier, we need to invest in them. So that includes developing the number includes determining whether additional city personnel and services are needed or not needed, as well as their respective compensation and costs. This also requires understanding and estimating the city's true capital needs. So our approach when it's coming to the number is really kind of starting with like the end in mind. We're kind of starting from what we want to envision the city to look like and work back. So our approach is we start with the number, and then we identify that gap between what the city's revenues are and what is necessary to fund the number. And we think this is the right approach because, again, it does Chester residents little good to just balance the budget or just not run out of money without providing adequate service. So again, recall what I talked about earlier, that concept of service delivery insolvency that we saw from the quote in the Detroit bankruptcy in the previous section, right? The judge referring to service delivery as insolvency as being, inhumane. We really need to start with what it's going to take to provide a baseline set of services here for the residents in Chester that's adequate. And again, we think this is the best way to ensure City Hall can provide vital necessary services for years to come. So how are we developing? What are we like literally actually doing to develop the number, and where are we in the process? What we need to do to develop the number is we have got to analyze the city's major operational expenditure areas. And there's really kind of, we're kind of categorizing them into three buckets, if you will. The first and really the largest is services that city employees provide. This is essentially stuff that city employees do. Services that city employees provide: police, fire, codes, finance, human resources, those types of services. There's the other bucket: services that and supplies that third parties provide to city government and city residents. Trash pickup, purchasing electricity, gas, utilities, computers, all the kinds of things that kind of some of the boring things that people don't really think about, but are important for the city. And then the third area, or the third bucket, if you will, are capital expenditures: road repair, bridges, traffic signals, buildings. So we've got to come up with a baseline expenditure number that, again, allows the city to provide adequate services in each of those areas. So again, let's kind of go through each one of those kind of briefly. And again, we'll give you a sense of what is actually going on, what we're actually doing to achieve this situation. First, starting with services that city employees provide. With the assistance of the city's chief of staff and CFO, the receivers team is meeting weekly to go literally department by department, position by position, to analyze personnel needs and compensation. We have done previously assessments, some by third parties, some by professionals on our teams, have been completed for the fire department as well as the codes department. So we've had outside groups who are experts in the area, in those areas, look at personnel and compensation. The assessments are ongoing for the police department, the public works department, and the parks department. Because again, we're really trying to take a look at what does it actually take to provide an adequate level of services for Chester residents. As part of this process, as I mentioned, we may add positions, say we should add positions, or we may say positions should be eliminated. Again, focusing on the vital and necessary services. We are not looking at this by individual. We are looking at this by position. This is not a question of looking at this by name. In fact, none of the names of anybody, as we're looking through this information, are on the screen. We are literally looking at this by position and by functional area. We're about a third of the way through city departments thus far, and we're literally going through this on a week-by-week basis. I have you can't see it here, but I've got a whiteboard listed for the next 1, 2, 3, 4, 5, 6 weeks with the various departments that are listed. In fact, this week we'll be talking about the finance department, and we expect to have this analysis completed by early October. And this will really kind of be the bulk of the analysis. Personnel, both in terms of number of people as well as compensation, is by far the largest expenditure component of cities. Second area, the services and supplies provided by third parties. Again, I mentioned some of these before. We're in the process of reviewing those as well. looking at services that third parties provide to the city, as well as identifying services that need to be provided, such as animal control. One of the issues we are having with respect to supplies is reliable, granular expenditure data. That's one of the things that we're missing over here. I'll talk about this a little bit later. Typically, when we work in communities that are distressed, we can go in and we can look at their audits, or we can look at their financial system, and we can pull at a pretty detailed level, what the line items are for electricity, or gas, or office supplies, or other items. We don't have that. We'll talk about this later. The last audit the city has was back from 2019. The city's new CFO, who's been on the job since June 5th, so only a little bit over 2 months, is leading an effort to ensure accurate financial information. But that's one of the issues we face, and that's part of the difficulty we have, not only with sharing that information with you, but also with other creditors who are also interested in knowing what the city's, understandably knowing what the city's financial conditions are. Then the final area that we're looking at here is capital expenditures. And the city has not had a recent comprehensive assessment of its capital needs in several years. And we really need a new one. We need an up-to-date one and a comprehensive one in order to plug into the plan of adjustment. The city is contracting with Herbert, Rowland, and Rubik, which is better known as HRG, an engineering firm, a very well-respected engineering firm based in the Commonwealth of Pennsylvania, who does a lot of work for municipalities to conduct 4 main assessments for the city: roadway assessments, bridge assessments, traffic signal assessments, and building assessments, in order to develop what the capital needs are. City, folks may not know this, has about 80 miles of city-owned roads, 9 city-owned bridges, operates 88 operational traffic signals. You'd be surprised as to how expensive traffic signals are. But these are some of what you refer to as kind of, boring items that you only realize are important when they're not working. We again can't go through a plan of adjustment process without looking at this. And again, we may come to a point where it says, look, this is too expensive and this is what we're going to be able to afford. But we want to start from that baseline. We want to start with what will this actually take, and then we want to work backwards from that. And obviously, HRG's analysis is not only going to inform what the number is, but what they're also going to do, which is really important, is to provide a framework for the prioritization and the completion of capital projects going forward. After a little bit of a delay, City Council has approved contracting with HRG. We're currently awaiting contract execution for HRG to begin work. I am asking about that contract literally every day because we really need to get that moving. HRG has some subcontractors who are going to be doing some very detailed analysis of the roadway, and we need to get those folks on the road doing their analysis as absolutely quickly as possible because there are many other jurisdictions out there who want the same thing to occur. Those delays, all they're going to do is push back our situation, which is not something we want to have. We want to have it all. So the other question here is, we talked about expenditures. What about revenues? So in addition to developing the number, which is expenditure focused, we also need reliable numbers, revenue numbers that are going to be used to identify them, right? If we have the expenditure numbers, but we're not sure about the revenue numbers, we can't define the gap. We won't have confidence in what that gap is. And again, hats off to the finance department and the new CFO. He is leading that effort in the city's finance department to ensure that we have accurate revenue and expenditure numbers. What is going on right now, for those of you who are true kind of finance nerds, is CFO Lathrop has directed the finance department to focus on doing 2023 bank reconciliations. What a bank reconciliation is essentially saying, let's look at the checks we're cutting, and let's look at the bank statements we have, and let's make sure they match. so that we properly account for all of our spending. The important thing about that is that helps you make sure you understand how much you're spending. So it helps with your cash flow, so you make sure you don't run out of money, but also what you're spending it on and putting it in the system. We'll talk in a moment about some of the difficulties we've had with financial reporting, but again, to the finance department's credit, they're moving forward on this. They're focused on 2023, and they're done with May, getting close to finishing up year-to-date June. Still need to do the journal entries from those, which are going to take a little bit of time. But that's been the focus, right? And that's important for us and the receiver's end, and also the city, to better understand where our expenditures are, so we can build that into the model. Again, we also, as I mentioned before, continue to await the Supreme Court's ruling, which again we think is important and critical in order to ensure solid operations and the right operations in the various departments, including in finance. And part of the reason why this is taking so long, or main reason why this is taking so long, is that the city doesn't have accurate and current financial data. As I mentioned before, in a typical Act 47 community, we would come in as the receivers team way back when we would have started and use audited financial information or verified budget to actual information to dump into the financial model. And then we'd work from there. In Chester, though, the last audit was from 2019. The city does not yet have a reliable budget to actual, which is, again, concerning from a financial operations end, but also, from a modeling end. So effectively, we have to build and verify the financials from scratch, which is what the CFO, who began work on June 5th of this year, is doing. It's important for us to have that, so that when we share that information, because we don't want to hide it. We think this is information we want to be transparent about it. We want to provide it to the public, right? We want to provide it for creditors, right? From our end, it's good to have an extra set of eyes on. We're not trying to hide it here. It's just that it doesn't exist yet. And what we don't want to do is put out information, or financial information, that we don't believe is 100% accurate. Because then all we're doing here is either one, confusing people who are making a good faith effort, or for people who may be trying to impact the process for whatever reason they have, using information for means that is just going to confuse people and mess the process up. And so, our desire here is as soon as we can get that information is to put it out there. We don't want to hide it. We want to put budget to actual reports out. We think that's important. Where we have information, pension plans, that kind of data out there, we love to share that. We'd love to get that out. But again, that's part of the issue we have. And for those folks who think that somehow either the receivers team is stalling this, we're sitting on it, we're not trying to share anything, we're just trying to delay the process. The status quo, where Chester is right now, it hurts the residents the most. And because that 2025 fiscal cliff that we talked about earlier, when we talked about potential disincorporation, is very real, the receiver, we have every incentive to move as quickly as possible. And that is what we're doing. By contrast, a lot of the creditors benefit from things staying the same. If we don't have information to kind of push forward with a plan of adjustment and things kind of stay the way they are up until the fiscal cliff, right? Up until we get to that point, and then everybody's in the same. Some folks who can benefit from things not changing. But from the residents' end, they are hurt. Every day things stay the same, they are hurt, right? And if nothing changes, right, nothing changes. And we want to move forward. We, again, want to remind the community and people out there who are asking, why aren't things moving along faster? The receiver filed his plan modification on November 8th of 2022. November 8th of 2022, asking for relief to address these problems. Same kind of data problems that we were talking about a few slides before. Same kind of operational problems we were talking about before. But to date, the matter is still in court. We're awaiting final resolution of that matter, but that's out of our hands. But again, we want to be clear. This isn't something we all of a sudden woke up on and said, hey, we got to get moving. We've been trying to do this for a while. And so in terms of kind of where we think we will be, where again, pending no additional unanticipated delays. I know that those words are doing a lot of work in that statement. We expect to have most of the number developed and more accurate financial data by mid-fall of this year. So in a couple of months. And again, we're trying to move that as quickly as possible. We know a lot of the mediations, are waiting on that information, right? Because again, who wants to sit down and negotiate if you don't really know what number someone is, someone sitting across the table is trying to reach? We get that. We're trying to move as quickly and expeditiously as possible. So, hopefully this provides those of you who are following this with a better sense of, again, number one, where the receiver is coming from, how the receiver is defining success, and also what we're doing literally on a day-to-day, week-to-week basis in order to move forward and get us to a point where we can get the mediations moving forward and move forward with the plan of adjustment. So with that, I will stop talking. We'll turn it back to the committee. Happy to answer any questions the committee has, or happy to sit back and listen to any comments.
Mr. Kapoor, thank you for today's presentation. There's quite a bit in there. And as you said, at this point, we'll open it up to the full committee. I want to acknowledge Mayor Kirkland for joining us here today. Thank you, sir. Open it up to the full committee to ask any questions they may have of you or me. Mr. Sheaf, Mr. Morgan, Mr. Kirkland.
Thank you, Mr. Receiver. I don't have any questions. I thought the whole presentation was very thorough and very well laid out. I think it's clear where this is headed, and some of the roadblocks and hurdles that's going to take to get there. But I thought it was very well done. I'm going to commend you on it.
Thank you, Mr. Sheaf. Mayor Kirkland or Councilman Morgan, anything to address?
I don't have any questions. I just do want to, that's a point of clarity. One of the things that was mentioned was pertaining to the amount or the positions that are being recalled back and or new positions that are being created. I think it was mentioned that majority of the positions are for codes or licenses and inspections. And if I can recall, I think there's roughly about 10 positions, and I think 2 of those are for code enforcement or L&I. I think the other positions are for public affairs and some in finance. So I just wanted to kind of correct that, at least from what the ordinance presents. There's 2 positions in codes and the other 8 positions are for other various departments. But other than that, I don't have any other questions to add.
Councilman Morgan, I believe you're referring to the most recent salary ordinance that was presented to council and acted upon at the last meeting. What I would challenge or what this is about, it goes back to the positions that were also created in the 2023 budgeting process. So the last round of edits to the salary ordinance may have only addressed 2 position and codes, but there were the build out of the rental registry program, which added inspectors and a management, 2 admin positions and a management position to build out that complement.
Copy.
Any other questions or comments from the committee?
Just real quickly, just so the listening community can be made aware. And I'm pretty sure both yourself and Mr. Kapoor know this. We have been constantly pushing to bring back employees or hire folks here in the city of Chester because we needed extra help when it came to our employees being able to provide necessary services that are needed for our constituents. We are now getting the green light, which is appreciated, but I don't want anybody to think that it's something that we were not requesting for quite some time.
I understand and thank you for that, Mayor Kirkland. I think the decline in city operations or personnel complement goes back decades. It's been a trend and one that we needed to get in and better understand and complete the department assessments before we could, I guess I'll say, join in that cry for more help. So, but we both are on the same side of this and understand the need for more staff, more investment into the infrastructure, and figure out a way to close the gap between revenue and expenses. I'll just conclude with that we have the opportunity here to really set Chester up for a different trajectory. Change the course of, dare I say, 100-year history that has kind of brought us to this point. Enduring the cumulative impacts of the environmental, physical hazards, inadequate public transportation, deteriorating housing stock, while wrestling with the possibility of yet another questionable facility being built within city limits that is constructed for the greater good, but at the expense of locals, or should I say, serves a significant benefit beyond the borders of the city of Chester. So we have to figure this out. Just on our baseline projections, there's a structural deficit of 15 million a year. Operating expenses exceeding operating revenues just on baseline projections over the next 5 years per year. That's at baseline. Mr. Kapoor, excuse me, and as Mayor Kirkland was just alluding to, there's a need to invest and do even more. So we've yet to figure that out. But then when you combine that with a new term that I just learned in the last week, new term to me, probably for the seasoned economic and community development folks, it's something that's been around for some time, but LULUs, locally unwanted land uses, locally unwanted land uses. Combining the effects of that with the structural deficit, you get to a point where it's just going to be insurmountable through a conventional plan of adjustment through a federal bankruptcy process. But it doesn't mean that we can just let it go. It doesn't mean that we just ignore it and just accept it, a status quo, as this is what Chester always has to be. We can push to do more. We will do that. Not sure how much ground we will gain, how much we will be able to accomplish, but that certainly will be the approach as we navigate through the federal bankruptcy process. Before concluding, I guess I'll open it up to committee. Are there any other final remarks, any other comments from the committee? Well, hearing none, Mr. Kapoor, again, I wanted to thank you for today's presentation. A lot of information in there. And as you indicated, it's on the quarter. This past May was the last substantial update. And I would expect that we'll have another update of this magnitude by November of this year, December of this year, as we look to wrap up 23, implement a 2024 budget, and hopefully by then to be talking about the long-term projections and a clearer picture of what we see moving forward. So thank you all for your participation here today, and I look forward to reconvening in September, the second Tuesday of September. Have a good day.